Here's a point I want to make on preferred stock. So preferred stock is not like common stock. It's a hybrid between debt and equity. And a lot of people think, oh, it's stock, so it's kind of like common stock. Nope, not at all. This is going to be much more like debt, actually. But it still gets paid dividends, but they're fixed payments, just like interest is for debt. But they get dividend preference over the common stockholders. They get preference to assets in the event of liquidation, so they get to keep more of those assets when the company goes under. They get paid out first, and that's something you might see in reg, right? The order in liquidation of bankruptcy. The possibility of being converted to common stock, the option of stockholders. So you could have convertible or redeemable preferred stock, and you could turn that preferred stock into common stock. So preferred stock is not really like ownership. A great example, all right, you got the 2008 financial crisis. And Warren Buffett, no, let's not start with Warren Buffett. We've got Bank of America. They're looking for some cash to stay afloat. And what do? Well, they look at someone like Warren Buffett, who has a lot of cash. And they say, hey, Warren, do you want to buy into our company? And this has actually happened. I'm not just making this up. Although I could make it up and make it embellished, right? Tell a great story. So Warren Buffett says, I don't really want to buy your stock. It's not looking too hot right now. And then they say, okay, well, do you want to buy some of our debt? And, now the actual thought process going through his mind, I'm not sure. But yeah, I don't really want to buy your debt either. So they say, oh, do you want to create this customized preferred stock? And he said, yeah, that sounds interesting. So basically what that kind of sounds like is maybe that's, and again, not really sure the exact amount, but maybe it's like 10,000 shares of preferred stock and they yield 10%. Now that's a pretty high amount because if the stock price is, I don't know, it's at $100, then that's $100 times 10,000 shares. And then 10%, that's times 10%, right? So that's a pretty high good yield for just like debt or just in general, right? Like for a safe payment. I mean, what are we talking? That's $100,000 a year. I mean, that's pretty solid. So it's a good deal. Preferred stock. You can just buy preferred stock at some companies on the market, like me and you. A lot of it is customized, and you got to be a big wealthy individual, high net worth individual to come in and negotiate that customized stock. So yeah, a couple other things. Generally, like there's no voting rights. It's only the profits of the company. Let's see. I'll leave that right there. Let's see here. So, here's kind of more examples talking about that. Equity, preferred stock, debt. I've got another graph right here. Kind of shows it in a similar. This is the same information, just in a different format. So take a look here. Well, equity is common stock. This is customized stock. This is a hybrid of debt and equity. Dividends are paid out on both of these, and they're not tax deductible. So there's double taxation, whereas interest expense is tax deductible for debt. So that's an incentive for the company. Debt's a fixed cost. Now, preferred stock it's a hybrid between a fixed cost and a variable cost. So equity is a variable cost because the better you do, the more profits you have, the more you have to give up. Whereas debt is a locked-in fixed cost. Now, that has its pros and cons. Equity is ownership in the company. Debt is not ownership, and preferred stock is not ownership either. Now, this is both fixed income. Preferred stock and debt are both fixed income, and equity ties you to the risk and reward. Preferred stock and debt do not tie you to the risk and reward. You are independent of that. Take a look at these, get familiar. The biggest thing I really want you to take away here is, preferred stock is not, it's actually more like debt than it is like equity, for a lot of the reasons we'll see. And it confuses a lot of people, and I don't blame them. I don't blame them at all. Just learn it now, see it now, and practice. Now, those dividends, let's see those treatment for those preferred stock dividends.